what I'm going to talk about today is what I'm seeing in digital investing, and my hope is for 2024. But last year, I was here exactly a year ago, and I gave a similar speech for what was going to happen in 2023, and pretty much everything that I said was going to happen actually did happen. What I told you last year that, for the second quarter, at least in 2023, we're going to see a lot of write-downs, a lot of cram-downs. Certainly, we were going to see bankruptcies. There was going to be a lot of debt raised, but the problem with raising the debt is you're always just kicking the can down the road. And there were a lot of reasons for that, of what happened in 23 so far. A little bit, residue of COVID, but a lot of it had to do with the beginnings of inflation. But more importantly, what kind of drove what happened was a lot of companies that raised hundreds of millions of dollars at valuations that were not sustainable by their P&L or by their business model. And then those companies struggled to raise capital. And if they had already raised debt, it was very difficult to raise new debt due to the SVB crisis that occurred mid-year. It kind of dried up the debt market. And on top of that, for exits, the IPO market was kind of drying up, and the SPAC market within healthcare didn't work so well. So the question really for 2024 is, are there challenges? Yeah, there's going to be challenges still in 2024, but there's a lot of light at the end of the tunnel. And I'll explain on a few slides and some statistics that show that actually there's some positives happening already at the end of this year that are going to lead to, I think, a pretty positive 2024. So real quickly, I always have to show this. Merck's legal statement just says that anything that I say is really my own opinion and not reflective of Merck. So just real quickly before I get into my predictions of and what's kind of happening, just a little bit if you don't know who GHI is. As said earlier, my name is Bill Taranto, not Tarantino, by the way. Just a little anecdote: if you speak Italian, Tino means small, and the Tarantinos were the servant group for the Tarantos. So little history there for you, but it's Taranto. The Merck Global Health Fund I started in 2010. We're a $500 million evergreen fund. We're mostly growth investing. We do A and B rounds occasionally, but we don't do startup or seed capital. We've invested over $1 billion in 70-plus companies to date, and we've had well over $7 billion in exits. And we mostly focus on pharmaceutical services. So, if a pharmaceutical company needs services, that's kind of where we focus our investment. And happy to talk to you at the break, about what GHI does. But some of our notable investments and exits were Livongo Health, Preventive Solutions, and even Ciox. All right, let's talk about what's been happening. So a lot of the headlines that you see up there are very similar to what were the headlines at the end of 22 and at the beginning of 2023. Some are the same, some are different. But one of the things that we're really seeing is that leaders are centering their digitalization in their business strategies, with companies switching to focus from products to patients. That's probably one of the biggest things that we're seeing. But bottom line is healthcare is radically changing, and the overall capital markets are changing along with what companies are trying to do. And I think that's important to understand, and we'll see that really in the next slide. So what this slide's really telling us is that, by Q3 2023, digital health startups raised just $2.5 billion across 119 deals. Now, one of the things that's a positive, though, that I want you to focus on is that if you look at the overall title of this, there's still been over $8 billion raised to date, with over 365 deals. So what this tells you is that there's money coming into the market, but it's not coming in at the volume that we saw in 2021. And what I'll tell you is that it's probably not going to ever go back to what happened in 2021. And as we said, there's a lot of reasons behind that. Those companies that raised money at those high valuations and hundreds of millions of dollars, it's not happening. So we're seeing basically a market course correction happening. So it's money still coming into the market, but it's less money. The good news is, if we have a positive fourth quarter, what we'll see is that we're pretty much tracking to what we saw in 19 and 20, and maybe even in 22. So 23 in and of itself isn't actually going to be all that terrible of a year. It's just a lot less money is coming into the market right now, but money is coming into the market. And that's the real positive I want you to take away from this slide. Yes, we're seeing a decrease, but again, if you just pull out 2021 as an anomaly, if we see any company this year that raises a lot of capital, it's the exception to the rule. It's not going to be the rule. It could happen, yes, but it's highly unlikely that we're going to see anybody raise that kind of money again. So, interesting about this slide is that, early stage investing is actually doing pretty well, and it's helping the overall stability of deal making. We're seeing a lot of money coming into the early stage. And one of the things I'll tell you anecdotally is I'm a growth investor. And so where we're seeing the money coming into the market is not only in the early stage, but actually in much of the third quarter and the fourth quarter, lots of money is coming back into the growth stage. Now, we're probably raising still at some flat rounds and maybe some slight down rounds, but money is coming back into the market, and that's good to see. And we're also seeing consolidation where private equity is coming back into the market and trying to consolidate some of these assets into single companies, and that overall is a good deal. But I think really, as I said before, it's sort of those mid-stage companies that are struggling. So these are your A and B rounds, and those are the ones that raised those high valuation, high dollar amounts that are really struggling to raise money. And the sad part is there's nothing wrong with any of these companies, but whether it's the hubris of the C-suite or the board, their unwillingness probably to take a down round or a severe down round, and maybe even a cram down to survive, it just ends up leading to bankruptcy. And that's where we're seeing the largest group of companies fail, is sort of maybe that A and B round sort of area. But the good news, as I said, is not only in the growth area in which I work, but also in the early side of the venture capital is certainly raising money. Now, one of the problems that's still happening, because there's not money coming into that sort of A and B round, and those A and B rounds can't raise money, one of the problems that we're seeing is that some of these companies are getting stuck at the seed or angel investing round. What I think is going to happen, though, is because those rounds are low risk and low money, and there is money coming back into the market, as long as those companies don't try to raise those massive rounds, but raise a smart round about how much money that they really need to survive the next 12 to 18 months and do it reasonably, you'll see investors come back and start investing in those types of companies. So again, I think there's light at the end of the tunnel just for these types of companies. They will get funded. The big issue that we have to figure out is how do we fund these A and B companies that are struggling to raise money, and that's still going to be the biggest challenge, I think, for the rest of this year and the beginning and maybe through the second quarter of 2024. Is we've got to get some of those companies capitalized. As I said, at least where I invest in the growth stage, money's coming back into the market. So where's the money going? As I talked about a little earlier, what's changed is the shift from sort of products to more patient-centered solutions. And what we're seeing is that the money is coming in, but it's coming in really interesting areas. Where we're seeing money go away from are areas like DTX. Unfortunately, we saw a number of failures within that particular space, recently with Pear Therapeutics closing and a few others. But the real good news is money's actually coming in. It's coming into areas like monitoring. It's coming into care coordination and care delivery, and especially in R&D. One of the big areas that GHI has been focusing on is we've been doing a lot of investing in AI and ML in drug discovery, including Target ID. We did 4 investments this year alone in that particular space. And we also did recently a few more investments in composition of matter as well as chemistry, but the use of technology, which is AI and ML in those spaces. So what we're seeing, again, from a pharma services perspective, one of the big areas that we're seeing money go into is this whole R&D space, and we're real bullish on that space going forward. And we're still bullish investors, especially around the monitoring space and the care coordination and the care delivery space, but that's actually where you're seeing the money come in. So there is good places to either start a company or to invest if you're an investor. And again, money coming back into the market, which is really positive. And finally, there's reason to be optimistic. Healthcare is a great place to be, and especially digital health. We are improving and saving patient lives in the end. That's what we're all about. We're really about helping the patient and help them have better lives around whatever disease state they have. And if you look at this graph, you know, if you believe this to be true, and whether it's these exact numbers or not, it is a growth trend that we are going to have money coming into the digital health market between 2020 and 2032. And as I said, we're seeing it coming back in. What I'm starting to see, again, is the capital markets are slowly starting to open up. We see a lot of money coming into that startup stage. We're seeing a lot of money coming into the growth equity stage. We'll figure out how to fund those middle companies at A and B round. But some of them are getting companies. The companies that are getting funded, though, are those that have good products and services that people are willing to pay for. And that's the other thing about where's the market going? It's going where there's good reimbursement, there's good use within the healthcare market. Payers and providers both like those kind of products, and they do actually something real positive as it relates to outcomes. Those are the types of things that are getting reimbursed. So if you're an entrepreneur or a budding entrepreneur, those are the spaces you want to be in. And if you're an investor, those are the spaces to be looking at. So the way I would look at 2024 to conclude is that I'm really optimistic and bullish about where the market's going. Yeah, we had a tough year in 2023, and we'll have some challenges in 2024. But the good news is capital's coming back into the market from all areas, and it's just about weathering a little bit more of a storm for the next couple months. But I do believe by the end of the second quarter, we'll see lots of money coming back into the healthcare market and the public markets opening up. So it's really good to be optimistic about digital health and healthcare. Thank you.